Hello everyone, and welcome back to Mr. Joe's weekly Bitcoin speculation videos. That bearish scenario we previously talked about came to pass, and the price tanked to our target and bounced. The downside possibility of this triangle being supported at $387 or even beyond, leaving our position up $40 a coin. Congratulations to those following along who agreed with the analysis, and I hope you too had bids down there at support. More recently, Bitcoin broke upwards of a triangle. Let's take a closer look. Full disclosure, I did have a long position from $390, but with this candle, my stop loss pulled me out around $406 where I re-longed to this support. Unfortunately, I can't watch the charts 24/7, so I did take a little hit in fees here. Now that my shameless blogging is over, we did break upwards in a price-based triangle here, however it was on very low volume. Indeed, there was no bullish break with the unbalanced volume. The Bollinger Band is also quite wide after a breakdown, but while currently contracting, we will likely trace sideways for a period before a proper breakout. There's also significant overhead resistance at the $420 level, which was previously support. This leads me to believe in a maximum of $9 per coin here, profit before a possible retracement, making this a very difficult trade, or even a trade to not make should you be trading spot with 0.1 and 0.2% fees. The risk reward just isn't favourable yet. Panning out, we find ourselves in a very large triangle, one which is getting tighter and will eventually become almost untradeable until we find that breakout opportunity. This convergence will probably continue as bulls looking forward to the halving and bears skeptical about the block size debate keep hashing it out. Speaking of the block size debate, the network suffered a spam attack and the price sharply dropped off where we saw rallies in the altcoins. Wait a second, this sounds familiar. Then a capital flight, selling Bitcoin at the exchanges and possibly moving to alternative cryptocurrencies such as Litecoin, Ethereum, Monero or otherwise until Bitcoin consensus is reached. Seriously speaking though, the threat of a spam attack is something we should briefly touch on. We're currently using 900 kilobytes of a 1 megabyte mempool. This means in order to effectively quote-unquote attack the network, you need to spam all of 0.1 megabyte worth of transactions to start bad times and the unusual fee structure. By my figure, it's roughly 3 transactions per second at 4 cents for the fee currently, so roughly $10,300 for fees are collected daily. Pushing the limits is only 10% extra, or just over $1,000, which is nothing. While increasing the block size doesn't prevent this attack vector, it will push the cost to 11 times that value. Satoshi's original 8 megabyte design would mean 71 times that value, and so on. I mean, obviously this is oversimplified, but should an absolute minimum attack cost be all of $1,000 a day, you can scale the fees higher to perform a more effective attack. I don't want to scare anyone as fees are still reasonably low, the Bitcoin network is business as usual. This is something to keep in mind. I'd like to think we're not all degenerate gamblers and rather informed investors. Back to technical analysis. We're close to an OBV break on the 4-hour, but for speculative new long positions, I would hold out for close before scaling back in, if at all. It looks like we're going to see sideways for a period before a possible rise to the top of the triangle, so this is your judgment call. Personally, I'm going to hold my long from $397 and trade Forex to try and increase my cold storage. Hell, maybe I'll upload a Forex or stocks video if Bitcoin is sideways enough. But I digress. Bitcoin is going through a volatile trading period right now, and this consolidation period is only going to get more narrow. It may be better to step back and wait for trying and reduce your risk. It also prevents you from attempting to trade sideways and just losing all your capital to fees. Be safe out there. Don't put 100% of your balance into a single trade, and don't forget to set stop losses either. Thank you very much for watching, and cheers.